Is it a buyer or seller's market?
If you see some property for 300, 350 in Chandler, for example, it goes very fast. With few metrics that we have on the MLS, which says it's a buyer's market or seller's market, there is something called the absorption ratio. You can see, okay, how many people are moving in, what's the economic activity. They'll say, oh, my friend told me every Monday morning the rates will be low.
Got it 75,000 under, appraised value because it just needed so much work.
Buyers have an advantage, so it's time for buyers to jump in. It's time for the buyers to take advantage of the seller's susceptibility. So you want to be a buyer in seller's market, you want to be a seller in buyer's market. End of this year or next year, the interest rates might start to come down.
I'm seeing with first-time home buyers, this is the biggest problem I'm seeing, is they're coming from a situation where they're paying extremely high rent.
My next question is it a buyer or seller's market now? Like we have been hearing a lot of news. It's kind of seller's market, but it's also becoming a buyer's market, I guess. So Venki is asking which one is it right now? And then the second question from him is when will the interest rates go down from your perspective?
I'm seeing a mixed bag. It depends on the area of town, on where it will be a buyer's market or a seller's market. Also depends on how low the inventory is in that area. Like today I was scheduling a showing and it was in the Paradise Valley area, and it's day one on the market. It already has a full price cash offer, very expensive home, 1.5 million. So we're not even going to go see it because my particular buyer has a significant amount of money down, but he's not 100% cash. So I see that. And that the very hot areas of the metropolitan Phoenix area are still getting, snagged, especially when they're a beautiful property and they've really maintained it and updated it, and the roof isn't old and the air conditioning isn't old and the style is very new and contemporary. Mm-hmm. Those homes will sell really fast. You can still get deals on the other end of the spectrum, though. I got a deal in Chandler that my buyer bought it as is. Got it 75,000 under, appraised value because it just needed so much work, and people would walk through and they shy away from that amount of work. So I don't know. I think it's almost balanced, and it depends on the area.
I feel, any market has smoking deals. Mm-hmm. Like you go to any market. I remember seeing Grant Cardone demonstrating. He has the LoopNet on in front of his laptop, and then he was sharing his screen saying, okay, right now I'm going to show you which areas we can go to. You pick any town in the country and I can tell you where we could go and then where we could find good deals. And then at the same time, he said, oh, in that area, some pockets we just cannot get good deal any time of the year. Mm-hmm. Paradise Valley is one such market.
It's a hot market.
It's a hot market. And then the first-time home buyer market, that's also is hot. If you see some property for 300, 350 in Chandler, for example, it goes very fast. And also, we get bogged down with so much of news and analysis coming from national perspective, right? If you see something on CNBC where it talks about, oh, it's totally a seller's market, blah, blah, blah. But right now you go to the TSMC area, wherein the Taiwan Semiconductor is opening their new fab, and then they are going to have like 5,000 people. And we see a lot of people from Taiwan coming with cash and buying up properties.
Yeah. Where was that?
It's on I-17.
Oh, yeah.
Near the Deer Valley, the TSMC area. So it's hyper local. I remember in Chandler also, when Intel opened the site, when so many engineers are being hired, Chandler is hot. So people might be watching this episode after maybe a year or 2 or 3 years. What we have to really remember is it could be buyers or sellers market. Your real estate agent should be able to tell right away, with few metrics that we have on the MLS, which says it's a buyer's market or seller's market. There is something called the absorption ratio, and essentially it shows it has a number of how many weeks of inventory that we have in the market right now. It says, okay, if it says 2 weeks, then it means that in 2 weeks, if assuming no other new inventory comes in, then everything will be exhausted. That's bad. And sometimes it says it's 3 months. That means that there is a lot of inventory. So that's a good metric, but that's just not one metric.
Yeah.
There is so many metrics you can see, okay, how many people are moving in, what's the economic activity. For all practical purposes, right now you can confidently say that it is seller's market because the days on market has been piling up on a lot of homes. So it's a seller's market. That means it doesn't mean that buyers should be away. It actually means buyers have an advantage. So it's time for buyers to jump in. It's time for the buyers to take advantage of the seller's susceptibility to negotiate.
Yeah.
So you want to be a buyer in seller's market, you want to be a seller in buyer's market, but it's very hard to predict and do it.
Yeah, and I think there are both the situations into play. There is macroeconomics, which is like the wider news, and then when it comes to hot areas like Scottsdale, rates will not go down much. So microeconomics is also into play in smaller pockets like that.
Absolutely. And then what I also feel that overall sentiment, for example, the Silicon Valley Bank, it just collapsed yesterday, right?
Yeah.
Then the overall sentiment today and for the next couple of weeks, because the memory is fresh, people don't know the impact, it will be a gloomier time for real estate and buyers will have full advantage. Sellers who are trying to sell, they are also in a panic mode and there is no showings happening. So that is like advantage buyer time. And people who have cash, like high interest rate environment, if you are a cash buyer, you can snag a very good deals.
Yeah, people with cash or a large percentage down can really snag up deals. But, I wouldn't even be afraid if I was putting less down to invest in something in a good area that might break even. Like, I was just looking, for example, in Payson, and there's no rental properties there at all. And if they are, they're either very low end or very high end, and there's nothing in the middle. So, you can look at almost any town and see what's missing if you're an investor and try to fill the gap. And even if you break even for 2 years and it's maybe not cash flow, but you just can see the opportunity because there's no inventory, then within a few years you've made a really great investment in a good area that's growing. So I just don't think, I think if you're a consistent investor, and you said this before, just like when you're buying stock and you're consistent over time, that's how you win. But when you're always trying to time the market and have the crystal ball, usually you're going to lose at some point, because I feel like the wealthiest people are the ones that are just consistent and methodical in the way that they invest.
Yeah, I'm a total fan of being consistent. Like any habit that I have to make, I have to do it like weekly, monthly, or there should be a pattern. Otherwise, somebody like me who is not as disciplined as I would like, I will just fall off the tracks. For me, what worked, Dan, is being very consistent. I try to buy a property every time, like every quarter. I want to shop intentionally for a property and I buy it. And that worked wonders because I bought properties in buyer's market, seller's market, neutral market, no market, where everybody is watching Super Bowl. I'm going to open houses and buying, and all that worked because the consistency is what it is. People who try to time the market fail.
Yeah.
It happens even with stocks, right? Like if you try to time the market,
Yes.
you'll fail. I bought Tesla stock when the savviest of my friends, who is like a genius with stock, right? He told me, okay, buy Tesla. Then immediately I asked him, is this the best time? He said, this is the best time to buy Tesla. So I dumped like $20,000 and shoop, it dropped. Gone. So I have to wait for a long time. I mean, so trying to find the buyer's market or seller's market, it's nice to have the conversation to know who is at an advantage. But the right time will be the time when you are ready. The situation, what you have right now, is what it is. And then you see some of the agents, there was even a Bloomberg report on this saying, okay, you date the rate and then you marry the house. Essentially what they're saying is, okay, rate is temporary, but the house and the assets value that you're buying, it is permanent, right? Yeah. So that argument is kind of, it's more like a sales pitch than anything, because the rate that you are going to get is what it is right now, and you're getting a 30-year fixed rate. You don't know when the rate is going to drop. It could go to 10%. I made a video on where there's a good chance we are going to see 10% interest rate. I made this almost a year and a half ago.
Yeah.
And now we are at almost 7%. So the rate, I would assume, it's never going to go down. If it goes down, it's a bonus. So you have to date as if you're thinking you'll be married, is my opinion. Because the macroeconomics is so big, the unemployment, the strange news of banks collapsing, everything, the local economy, there is so much of things happening, and now Fed is trying to conquer the inflation. I don't think as a mortgage professional I'm unable to say, okay, this is my prediction. Even though I'm optimistic that, okay, maybe by end of this year or next year, the interest rates might start to come down. But if I look at the average for the last 30 years, we are still in a low environment. I remember the first house that I bought, my primary home interest rate was 6.25%.
Yeah.
But then I refinanced it down to 2.5%, and the rates dropped, and it was a bonus for me.
Yeah.
So that's the mindset the buyers have to go in. You cannot trust the analysts who say that, oh, interest rate is going to drop after 6 months, a year or 2 years. You just have to go with the best opportunity of seller concessions, buy down. What do you think, Anne?
I think that's good. And also, I think sometimes people get freaked out. Like, as long as you can cover the rent over the mortgage payment, you're good. But, even in 2008, we watched those people jump out of houses, and they would have been fine had they waited 5 years, because they would have been able to rent it for the mortgage payment, hold on to the property. So it's definitely just back to that it's always a long-term investment. It's not something you jump in and out of in a year. I don't feel comfortable with that approach for really anybody. I've never felt comfortable with that. I guess I've always been a little more conservative as an investor.
And you've been extremely successful in buying assets, and you know that people who try to flip properties is what they should be concerned about, market volatility and all that. But people who are going to especially move into the house as primary home, you have to just look at your income. You have to look at what the rate is, what the property values is. If those logistics make sense, you have to jump in. And if anything that changes to help you, it's a bonus. Like interest rate going down is a bonus. And as a professional, I'm unable to predict the interest rate, because people who predicted, they failed time and time and time again. Even Silicon Valley Bank was listed as the top 5 in the banks that they have. It just happened 4 days ago.
Yeah.
Jim Cramer was like saying you have to invest in Silicon Valley Bank.
Oh, he jinxed it.
People jinx it a lot, and those are like the professionals who get paid millions of dollars to be on TV to predict stuff. So that's why I would say nobody knows.
I was watching the news. I think Fed might be planning to increase the rates a little bit more now.
Yeah. See these Fed rates and the news of rates increasing. That is for the overnight borrowing rates for the banks. Of course, it will have a trickle effect on the mortgage rates also. It's a good rule of thumb that when they raise the rate, the mortgage rates also usually go up, but not always. There were times wherein they increased the rate and then the mortgage rate went down. So they are not like directly related. Some people think they are directly related. Regardless of it, I wouldn't predict. Like, I have some clients who want to game and time the rate lock. They'll say, oh, my friend told me every Monday morning the rates will be lower. There is nothing like that, but people just predict stuff and others believe it. So my message is, don't believe anybody, including me, if I say, oh, rate is going to go down. I don't know. Nobody knows. The factors are too many. Even if you call the chairman Powell and say, are the market rates going to be higher next month? He's not going to be able to predict, because there is too many factors.
But at the same moment in time, if we all just take money and put it under our mattress, what's it going to do? Nothing. You kind of have to take some risk and put some money out there consistently over time. Otherwise, you're never going to get anywhere. Nobody wins when everybody does that. Yeah. Definitely don't overbuy for your budget. Maybe you need one less bedroom right now to make it affordable, but I think the consistency of putting money out there to invest for your future, 10 years from now, you'll be happy you did that.
I love that advice. See, you can get one less bedroom and make sure the budget makes sense. And that decision of you going for a smaller asset is, you'll be thankful to yourself after 10 years. Because 10 years is the time even I figured that it's going to take for any asset to cook and mature and give you the returns. The properties that we bought 10 years ago, we used to get rent like 1600. I don't know if you remember the property on Fargo.
Yeah.
Fargo, you were the listing agent, I bought the property. So that property, we bought it for 150 that time, and we were getting about 1500 per month rent. Now I'm getting 2200.
And
So
you
it
could probably
increased.
get 2,400.
Yeah, I could probably get more. It's the same tenant from that day
Yeah.
till now. He's been paying rent. He's probably happy that I take care of the bulbs
Mhm.
whenever the bulbs are out, but that's nothing for me, and it pays a lot of good returns. So that's why interest rate, nobody knows. Nobody really knows. It's like asking your boss, is my job guaranteed? Nobody knows.
Yeah.
Nobody knows.
Yeah, so it's a different scenario for both parties. Like if you are a new home buyer, it's a different situation, and if you are an experienced investor or you already have your primary home, then you have the luxury to wait and see how the market plays, and you can wait and take it one notch down in the risk. But for a home buyer, if you keep waiting, it's very difficult to predict how the market will play out, whether the rates will go up or come down. But there could be an opportunity cost.
Yeah, opportunity cost is huge. That's number one. Nobody can predict how the market is going to swing. It's going to swing up or down. We don't know. Make a judgment call and see what makes you comfortable. The biggest thing is, when should I buy? It's like buying a TV. If you're buying it the week before Thanksgiving, you know for sure Thanksgiving there might be some sales. You can wait for it. But in real estate, you don't know. It's just too many
variables.
Too many variables.
Yeah. So if it's a seller's market today, nobody can predict whether it is going to be a buyer's market next week. It can change that fast, right?
Yeah, it can change that fast. And the way that I sense it is, we have a program called Showing Time. In that, I'll be able to see the total number of showings, in the sense that how many buyers are there in a subset of a market. Because even I can't say the entire Chandler, right? If let's say Chandler between 500 to 650,000 is my client's budget, I'll just keep track of how many showings are happening, and the less the buyers, the better when you are a buyer, because there is not as much competition. And if the traffic is growing, by the time the news gets it and reports it, it might be too late. But at the same time, you're watching for it, even though there is zero control on it, you can at least watch. And by the time you decide and by the time you make an offer, it might be too late in many cases.
Yeah, I think the news is typically very far behind what we can see firsthand. I mean, that listing, for example, that I saw today already had, I don't know, 15 showings and a full price cash offer. So homes are still selling, homes are still moving, people are moving here, our inventory's low. As long as you can cover the rent, in worst case scenario. I mean, rooms will rent for $800 to $1,000 a room.
Wow.
So if you think about that, like I have helped several families buy like a townhouse or something for a kid, and they buy a 2 or 3 bedroom. Well, the child can rent 2 bedrooms out and cover the entire mortgage. So it's a good future investment, even if you don't, pass it along to your child yet. And if they're 18, you can get on the mortgage with them and, put very minimal amount down and at least break even until it's a future asset for that child. So
I mean, we in one of the episodes we talked about the strategies on how you can increase the rent. So short-term rentals, super hot right now. You can do either Airbnb, some HOAs don't allow it, or you can do room renting. Some people what they are doing is they are basically finding individual roommates and they are all putting them together and they are able to maximize. It's not an Airbnb, it's a long-term rental. At the same time, you can do room rentals. There is a lot of hacks like that you can follow, but there is no hack to find out when the interest rates are going to go down, when the property value.
it's Monday, isn't it Monday?
Yes.
Every Monday.
Every Monday, So that's what it is.
Any suggestions, like if the person is a new home buyer or he is looking for a second home, what do you suggest at this point? What they are looking for, like they should wait or what they should do?
I would say if they have the down payment ready, if they know the area that they want to go in, you just have to look at the economic dynamics of that area. Are people moving in? Are people moving out? How is the overall inventory on it? Based on that, a buyer's market in majority of the Phoenix metro right now. So if you're a buyer, you're in for a lot. You can negotiate a lot. You can get seller concessions. I would say buy right now. if you don't have to buy, if you want to wait, and if you want to game the market and time the market, then who knows?
I'm seeing with first-time homebuyers, this is the biggest problem I'm seeing, is they're coming from a situation where they're paying extremely high rent. So they're having a difficult time saving the down payment. And I talked to a guy yesterday where his truck payment was $800 a month. Well, the first thing he did was sell that truck because he needed to get rid of that debt in order to look good to buy. But then he needs to spend, his game plan right now is to work 1 day overtime for the next 5 months to save his down payment to get into the home. Because I get some first-time home buyers that call me and they think that they only need $5,000 to buy a house. And what they don't realize is even on a moderately priced home, you need at least 3.5% to 5% down, and then you have lending costs too. So it's not just a few $1,000s to get into a house. I mean, you got to have a good $20,000-$30,000 saved up to be comfortable moving into your first home. The zero down programs are not happening as much, and that can happen through gift funds. You could take money from 401k. You can move in with your parents and save if it's a first-time home buyer situation, save for a good 6 months. But I feel like the savings is a real problem right now with the first-time home buyer group. They're struggling because they're coming from $2,500 a month in rent, and they're having a hard time saving money that way.
Your question is, should they buy or wait?
Yeah.
So her answer is right on, wherein she says if you are a first-time home buyer, if you are paying rent, then it makes sense to buy.
Yeah, because you pay less to buy.
And my addition to that is, if you think that you can be in that home and manage the finances at least for 2 years, then suggestion is to buy.
Okay.
If you're an investor, it's different thing. Investor, you have to look at other dynamics. You might have, the cash flow will not work out for many areas with this interest rate.
Mm-hmm.
But for primary home, if you're paying rent, you might as well buy and play the market.
It's the same, but you got to be real clear with a good lender like Kiran. You do a great job of telling people what the proper expectations are for the cash flow that you need to buy a house. Sometimes people have a fairy tale view of it being very little, and they do need to save some before they buy.
Yeah, that's why we are creating this series so that people can
Yeah.
find some good information and they can make informed decisions. Yeah.